The unexpected U.S. crude build was due to a data adjustment and a release from national reserves. One of the reasons why oil prices dropped overnight was a surprising increase in U.S. crude inventories. According to the Energy Information Administration, EIA, U.S. crude stocks rose by about 3 million barrels last week, reaching 461.9 million barrels. This was far more than the market expectation of a 1.5 million barrel drawdown. However, this buildup was not caused by a sudden drop in demand or a surge in production. Rather, it was the result of two factors: a data adjustment and a release from national reserves. The data adjustment was related to the way the EIA calculates its weekly estimates of U.S. crude production and imports. The EIA uses a combination of survey data and statistical models to estimate these figures, but sometimes they need to be revised based on more accurate information that becomes available later. For example, the EIA may receive delayed reports from some producers or importers, or it may discover errors in its models or assumptions. When the EIA revises its estimates, it also adjusts its inventory numbers accordingly. This means that if the EIA finds out that it underestimated U.S. crude production or imports in previous weeks, it will increase its inventory figures retroactively to reflect the higher supply. Conversely, if it overestimated U.S. crude production or imports, it will lower its inventory figures. Last week, the EIA made a significant data adjustment that added 2.6 million barrels to its inventory estimate. This was because the EIA found out that it had underestimated U.S. crude imports by an average of 520,000 barrels per day, BPD, over the previous 4 weeks.